All right, here we are on Tuesday. And what are we going to look at? So, what I did today is I was noticing that previous area over here where the low was 194.07. And back in this time frame, I was saying that, we're probably going to test that. And it's a very small area of support. And that, in my opinion, I thought we were going to break below it. So we had the day of the earnings back here last week, where the highest price we reached up to was 193. The low of the area back here was 194.07. So I'll have to kind of correct what I was saying in my last video, and that is, um, I was saying if we get back over, this area, I think that's what I said. I'm not going to go back and watch it again, but if we get back over this, that then probably right, that would mean that maybe we are, the tide has turned and the bottom has been set. Now it's possible. It's possible that this is the low that needs to hold, which got down to 180.07. So there's a simple number, right? $180. And it lines up with the line, that trend line on the weekly chart that I drew, which is this line right here, landing slightly above that. So, it could be the bottom, but in my opinion, I don't think so. And the reason for that is it's usually not that easy where you just hit a point and then it's just takes off from that point. It usually has to build a base over time, and then it plays out eventually to find its bottom. So anyway, what I wanted to correct was, now in hindsight, and it's always good to kind of go looking day by day. Like I said, I'm going to focus mostly on the weekly charts, but the smallest one really now will be the daily chart that I'm going to look at. Really, the daily and the weekly. That's really all I'm concerned with as far as Tesla. So, I like to really get into what is happening with the stock price. So today it opened higher, right? It opened higher right here. The opening price was 195.33. And at the highest point, it got to 196.37. So where does that fall into previous price action? That falls into this little area right here. Because this area from, if I use that candle, the high of that, I mean, that's pretty extreme, but the high of this candle here is $210.88. And then here you get down to 194, and then this particular one right here goes up to 205.99. So if you just look at this block right here, what happened was the high of today, which was 196.36, I basically drew the line right near the high because it gives me a better visual perspective as to where is it reaching, what previous price area is it reaching, because that's generally how you establish support and resistance, is looking at previous price levels that were at that same general price. So where that brought me is, this is the line for today's high right here. And so where, if you look at it in the big picture, if you look at it, all it did was reach the very lowest end of that particular day, which was at that time the low of 194.07. So you only got up to 196, a couple dollars from the low. And if you look at how the candle finished today, right, it finishes down here at 191.59. So that's not a powerful statement. If the candle had finished up here, if the candle had finished up here, that would be, a much stronger, like, hey, we're still going, we're still going forward. That doesn't mean that, you still would, have anything amazing that was accomplished, but that would tell you if it finished up here rather than down here, that most likely it wants to go further. But then the next resistance is going to be the exponential moving average, which I like to use, which is the 12 period, which is on the bottom, because when things are in a strong downtrend, the 12 is underneath the 26, just in case any new people don't understand these parameters that I like to use, indicators. So what I'm noticing is it's just touching that area. It's just going up there, giving it a tap, in my opinion, and saying, okay, we got back to that. That's the resistance, because here, right, on this area, you got below that, right? If that was going to be support, well, you got pretty far below that support, and all you did was come up and give it a little love tap and say, okay, we're just going to say hello, and then we're going to proceed further down. In my opinion, that's the way it looks here. And this is drawing down. So let's just say, even if we go up a little bit tomorrow, or even get right near the highs, and then if we, even we could even go up a little bit more. We could go a little bit higher than the 196 that we reached today. But all that would do would still be in this area here, and it would then get up to this exponential line, because this will start catching up just because of time. And to me, that will be the resistance. That will be the resistance until it's not the resistance. And the other thing that happened is on the daily, the RSI. Remember, I said it was extreme. That's why I didn't have a very big short position. Today, I did add, not a lot, but like about $600-700. When we had this open, I said, okay, what's the risk? The risk is, I shorted here, and maybe we go up 2 or 3 more percent, and then I'll add a little bit more there, and then I'll place my stop above there. So anyway, that's how I played it this morning. I added more, and then I just took profit. I just sold most of what I bought today and had a nice, gain of like 3 or 4%, because from 196 we finished at 192.59. So maybe 2 or 3%. Not a big deal, but I'm going to take it because I'm going with the current trend. So anyway, so the other thing was the RSI level was extreme, right? So I wasn't surprised that there was some upside, buying. So we went from a 17.43, and now where are we? We are at 28. So now it's not that extreme on the daily RSI level. It's not that extreme, considering that this is where it is after those earnings that were, what finally gave the final nail in the coffin. So now the RSI has cooled off on the daily time frame, which for me means, that will then, it'll be easier to put more pressure to go down, because, when you get down to 17, for sure, you're going to most likely have a bounce very soon, And so now we got our bounce, and now, to me, we're topping out, and the RSI level, I like to, it's something, this is just unique to me, I would say, but I like to compare the actual RSI, similar to the way I use this 12 period exponential line, that, at some point you're going to touch it. That's probably going to act as resistance, just like I sometimes use the 200 period moving average on different time frames. And if you're strong, then when you come down and touch it, then you're going to use that as your support. And in the opposite, if the 200 period is way above and then you finally reach it, you're generally going to reject once you get there. So on the smaller time frames, the 12 period here, I'm anticipating that you're going to reject from it. The average daily RSI is, just a minute here. What happened? Why does it not show it? Probably because I moved this too much. Let me pause the video and I will get right back. Okay, so this is just something that I have started to incorporate a little bit as another way of kind of reacting to things. And that is, you see the divergence, you see how far when we got down to that 1743 RSI, but the average RSI, you see how far away you were from it. I kind of used that also as like a move. I mean, that is an average. This line here is a moving average of the RSI. And so I kind of use it like the 200-day moving average or the 50-day or the 100, whichever one, that when you get so far below it, you're going to probably come up and touch it. And that's the same idea on the smaller time frame here with the 12 period, that at some point we're probably going to touch it, and maybe you'll go a little bit over it, and maybe you'll even touch the 26 period, and then you would then probably, have further downside. So I also look at this and say, okay, now we got up here and we're touching the average. And so now the daily RSI cooled off and got up to 28.04 today, which lines up with the average, which is 28.96. So in reverse, and like I said, this is not, I don't know if I would say that I would advise using it, but I've been kind of using it. So if you notice, and it's not an exact thing, but on the uptrend, you see during this period here, you got on the upside, right? When Tesla was going up, the average got up to 45. No, I'm sorry. The actual RSI, this is on the daily chart, got up to 45.8 here. But look how far it is from the average RSI, which at that point was 32.92. And then it comes down, doesn't touch it, but it kind of acts as a support. So I'm looking at it here as and this is a pretty strong slope. When it's straight across, then things could get, where you might tip over it and under because it's not a strong arc. But the average is, arcing downward. And so, anyway, enough about that. Where am I going to go next? So I brought up the RSI, right? We cooled off the RSI. We just got into this range, and also it's kind of getting close to that 12 period exponential moving average. Now on the weekly chart, this is how Tesla looks on the weekly chart. This is where we are right now. So on the weekly RSI right now, that's moved up, and now it's up to 38.44. And if you remember, I was saying I'm not sure if the RSI on the weekly will go all the way to 30, but I think it'll get close. And so now with these last little bounces that we've had, the RSI is not really, that extreme at all on the weekly. It's at 38.44 and the average is at 40. So now if you look at the trend lines that I drew, which is right here, right? You see how last week it pretty much lined up right there. And I was talking about how I thought hypothetically that it might, come up in this area, probably not get above, 215. I think that was a figure I used a while ago. I'm pretty sure we're not going to get up to there anytime soon now. But, so this is just the first 2 days of this week. That's where the candle is. And to me, it'd be highly unlikely that that is the bottom. And then we just proceed to make a lower weekly high and then a higher weekly low, which would then have to be a daily trend change in order for that to happen. I just don't think that'll happen, because in order for it to be a daily trend change, then we need to hold this area and then we need to go above this convincingly to confirm a daily trend change. But even that, you have to continue that in order to, to get up to some, better price levels. So going back to the weekly chart, if, like I said, if my thesis plays out, then, right, it will take probably weeks, maybe months, where we have eventually at some point a rounding bottom forming on the weekly time frame, and we need to, in my opinion, we need to drop to around $175 in order to, number one, fall into that 61.8% retracement. And right, so we could, get maybe 2-3 weeks, and then we come back and touch this again, right? So right where I have my cursor, that is 173, and that would be right into this area right here. And as I've been saying, I'm pretty sure we're going to hold that $152 level. And keeping this channel alive would mean that it needs to not drop much lower than 175 to 170. You might have, this could be what happens. You could have a week at some point in time where you dip below this trend line, similar to something like this, but then you end up with a wick, meaning it doesn't close below this trend line. It might be the final push finding the bottom, and then you create a wick, and during that week then people come in and start buying, and then by the time the week finishes, you're back right at this trend line and maybe slightly higher. That's what I'm thinking might potentially play out. So anyway, that's my video for today. If you like what you see and you haven't subscribed already, go ahead. I appreciate, I've gotten a few more subscribers, so that keeps me wanting to do this more. And so I'll update you probably in 2 more days, not tomorrow probably, but on Thursday. So have a good day and hope this helped.